This week on the Business Owners Corner, I'd like to talk about one of my favorite tax strategies for business owners, particularly those with kids. The tax strategy is to hire your kids. This can be really beneficial for a number of reasons, and the best way to explain it is just to walk through an example. Let's say that you own a business, you make $300,000 a year, and maybe you're in the 24% tax bracket. Meanwhile, you've got a couple kids. Maybe one of them is a teenager and old enough to show up at work and do some menial work that you can justify paying them for. Let's say that you have some kind of office. Maybe they can answer the phones and file for you, sweep the floors, do general stuff, minimum wage that needs to be done anyway. If you make the $300,000 and you're in the 24% tax bracket, maybe you hire your kid and they make $6,000 a year working for you throughout the year. Well, the deal is now you have an additional $6,000 business expense that's deductible. So your income falls from $300,000 to $294,000. You pay a little bit less in tax. And the beauty is that by adding your kid to payroll, if they're making an income that's less than the standard deduction, which this year is $12,950, they don't pay income tax on it. They don't even have to file a tax return if they don't want to. They might want to in some circumstances. There's a good reason to do that, but it keeps the $6,000 that they earned within the family and absolves you from paying income tax on it entirely. And there's a lot of circumstances where this can make a lot of sense. Maybe your kid's a teenager and just starting to drive. You're subsidizing their auto costs and insurance costs. Well, maybe you hire them to work in the business, have them pay for those costs, and now those are basically deductible expenses because you're not paying income tax on that same $6,000. So there's a tax benefit to hiring, number one. The biggest benefit, in my opinion, is that when your kid has earned income by working for you and your business, that qualifies them to make a contribution to a Roth IRA. And remember how Roth IRAs work. You put money in, you pay tax on that money, it grows tax-free. If you take it out when you're in your retirement years, you don't pay tax on it then. You never have to take it out if you don't want to because you already paid tax on the initial contribution. In a traditional IRA, generally you get to deduct your contributions. They grow tax deferred if you invest them over time, and then you take withdrawals later on. It's all counted as taxable income then. And you have requirements surrounding how much you have to take out when you're 72 and older because the government's waiting to tax you on it. Here's the biggest benefit. If your kid is making $6,000 a year, that $6,000 is earned income, which qualifies them to contribute up to $6,000 a year or 100% of their earned income, whichever is less, to a Roth IRA. But since they're not paying income tax on it because they're making less than the standard deduction and they don't have a tax liability in the first place by making that level of income, they're not paying tax on a $6,000 contribution. It goes into a Roth IRA tax-free. You invest the money in the Roth IRA, it grows, and you have decades of compounding. And when they're in their 60s and 70s, 50, 60 years down the road or longer, they can take the money out tax-free then. So it's triple tax advantage, just a way to get money into a tax-deferred retirement account. And it seems like, yeah, your kid's a teenager. Why do I need to be thinking about their retirement now? Well, remember, the longer you can get these investments working for you, the longer they have to compound and grow, and it's all going to be tax-free if you do it right. And here's the best part. Your child doesn't even need to be the person making the deposit. You can open an account and make the $6,000 deposit on their behalf for them and let them keep the money that they earned from you at the business. So there are multiple tax benefits. It's not quite so simple as that. You have to absolutely make sure that your kid is doing bona fide work for you for a reasonable wage. You can't have them come in and work a couple hours a week and then pay them 50 grand or anything like that. You can't, if they're doing minimum wage work, you have to pay them minimum wage for it. But if you can structure it in the right way, it's a very helpful multi-generational wealth planning tool and a way to minimize taxes in the long term.